Hey there, everybody. Thomas with Basecamp Trading. It is Thursday, July 18th, and we're going to continue on with the Fundamentals of Trading series here on YouTube. And today we're going to be talking about initiating trades at the right time and trading in the right direction of the market. So before we do that, though, before we dive in here, make sure you hit that like button and don't forget to subscribe if you haven't already done so. So we all know, because if you watched the first video, we talked about the definition of a trend. You all know that markets move through periods of expansion and compression, and that we have trends with lower high, lower low pivots or higher high, higher low pivots, right? So if we understand that a market expands and then compresses and then expands and compresses and expands, and we've been trading crude oil like this all week this week. It's been a great week for trading like this. And we know that it goes lower low, lower high, lower low, lower high. This is just textbook trend. Then when we go to start placing trades, the mistake a lot of people end up making is they'll go and they'll try to sell, for example, right now in crude oil after the move has taken place, or they sell at the end of the day yesterday, or the end of the day the day before, or the end of the day before that. So what most people, or a lot of traders, end up doing is they see the market moving, they do not get in, their emotions kick in, and they go, oh my goodness, it's never going to stop. And they go and they start selling right here and right here. And what ends up happening is then the market turns, goes back up into consolidation for a little bit. They get stopped out, and then it turns and runs and moves right back their direction. So when we're trading, if we understand and we know that markets move like this, they trend down or they trend up, higher highs, higher lows, or lower highs, lower lows. Then when we go to start placing trades, we want to be looking to place trades over here after it's gone back into that consolidation and we've started going back into expansion. And one of the ways we do that is we look for compression breakouts. So for example, today, the two levels we were watching in crude oil, we had the trend line break for your more aggressive entry at 56.77. That was on what we call a micro trend. Same thing we did yesterday, by the way. Here's your trend line, and same thing we did the day before. Here's your trend line, except the day before, actually, we were watching the low right down here at 51. But you look for either the trend line break for your aggressive entry or the break of the pivot lows for your more conservative entry. So the reason we say these pivot lows is because at 56.58 today, we had the low earlier or late last night, and we had a low early this morning, and we went down and tagged it again right before it broke down. So it showed that the market was respecting that. So keep an eye on where you're initiating your trades from and make sure that the market actually has potential to run in the direction that you're trading and that you're not chasing it and trading the tail end of it because you have your emotions kicking in. All right. That is it for today, though. I hope it helps. I will see you all in the next one. Don't forget to, again, hit that like button. And until next time, everybody, happy trading.